From one tech laggard to another, let's dig in a little bit more to Alphabet and that disappointing ad revenue. The shares are down nearly 5% now as a result. For more on Google's digital ad story, Mark Douglas is here. He is the CEO of Mountain. Mark, what jumps out to you? Welcome.
I think there's a big misconception about YouTube in particular, which is that it's somehow connected TV. It's not. YouTube, the connected TV is long-form content, major networks, major shows. YouTube is short-form content, podcasts, user-generated content, and advertisers are not as interested. And so I think every single quarter, YouTube in particular is just shy of, maybe they'll hit, maybe they'll miss. So it's actually not unexpected. It's just that's going to continue to be the case probably forever.
So what do you make of the other declines? We've seen some of the social media ad-driven names, Pins, Snap, and so forth. I mean, what are your conclusions from what Alphabet has then told us?
Yeah, well, that I think is entirely different. So I think you cannot read what YouTube's performance is like, something like a precursor to downward pressure. I just think ultimately advertisers are not the huge fans of YouTube, obviously has a big audience, but it has none of the qualities that big advertisers want. They want brand safe content, it's user generated content. They want long form shows where people are dying to watch. And YouTube is kind of throwaway content for the most part. And a lot of the ad dollars on YouTube, one thing I think is also misunderstood, a lot of the ad dollars actually go to the podcasters who embed ads in their podcasts, and that money doesn't go to YouTube. So I think there's nothing to read into it. Any drop in the stocks, actually, I'll probably be buying today.
So let me separate this then. You're not necessarily saying this is a bearish development for Google, but what's even more interesting is you're saying that we shouldn't think of YouTube as this amazing destination for ads. I find that almost shocking because we know it's the biggest streamer now. This is where all of us, myself included, spend so much of our time. There's not more power in that? Although, granted, yeah, I pay for the ad-free version. So
yeah, so if you were not paying for the ad-free version, this is what would happen. Every time a video starts, you would be hovering over your mouse to skip it. And meaning every time the commercial starts, you don't get that on Peacock, like your parent company. You don't get that anywhere else. It's just a totally different experience. People can't ignore the eyeballs, but they don't love the ad experience. The users don't love it, and honestly, the advertisers don't love it either.
All right, final question. I'm going to ask you to shift hats a little bit because you're also quite a savvy stock picker, as you alluded to with your Alphabet comment a moment ago. When you see the NASDAQ selling off the way that it is today and big tech doing what it's doing, NVIDIA and so forth, I mean, what do you think?
I think it's a buying opportunity. I think Google's results overall were actually pretty good. YouTube is kind of a weird property for them. And I personally, I know people worry about the market being overpriced. It's not like I'm a professional stock picker, but I actually think it's a real buying opportunity. I think 2025 is going to be a fabulous year for everyone.
I hope you're right. Mark, thank you as always for making the time. Good to see you today.
You too.
Mark Douglas with Mountain.